Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up, and we are now on Thursday, the 26th of September, 2019. So here we are with the down day in the stock market. It wasn't so bad. The reason it wasn't so bad is we went through that hole this morning where we were watching the whistleblower talk, the interview, and of course the Democrats coming out trying to get the best of the president. The market didn't think that they did. That doesn't mean the impeachment inquiry is going away. It's not. But the news coming out, I read Bloomberg, it sounds like it's doomsday. I read other reports, it doesn't sound like it's so much of a doomsday. And this was not a doomsday in the market. Considering all that's going on, you're still near those highs. Now, the gold market, well, it closed up a little bit, but the last quotes of the day were about $4 lower than this, and silver was even a little lower. The market that's been strong is the dollar, and that's going to come home to roost in a negative way. We're pricing our goods so expensive, trade is difficult. There was nothing going on in energies today, but we'll see that. I today added this number. I wanted you to see now the most current highest close of 30.13. This was the highest close that we've had, which is 30.24. We're not that far away from them, but we're slipping. And if the market wants to slip further, you could be down at that 18-week moving average of closes, which is the 29.50 zone. There's no magic there. It's just that when you're over it, I have upside bias. When you're under it, I have downside bias. When we take a look at the chart action, the market has run into resistance, and you can see that right through here. When that was occurring, I know I was pointing it out for you. And now we've slipped back. What's the pattern in that? The pattern is bearish. You have lower highs and lower lows. As a chartist, take the name off the chart so that you don't get swayed by that. You ask yourself, what is the market doing? Well, it's in a downtrend as defined by the pattern of lower highs, lower lows. I filter that by seeing where the market is in relation to the 18-day average of closes. And when the market is under it, 29.80.50, 29.85, that says to me that the bias is down, the trend is down. A potential if the market wants to extend, where's the next key moving average? That's the 100-day. And then I always look to see where the Bollinger Bands are. A Bollinger Band is this black dashed line. They're not parallel to each other. They're an algorithm designed to keep the market trading within them 95% of the time. A good way to consider it is the first time you hit it, it's resistance. First time you come down to it, it's support. In this particular case, the Bollinger Band is very close to the 100-day average and over it now. So the first support isn't the 100-day average, it's the 29.33 area. It'll be a little higher tonight, I'm sure of that, when we open. And that'll just move up a little, and that'll be that support zone. It also tells me that a break, if it comes in, has reasons to be contained unless there's some piece of news that overwhelms the market. What negates this downtrend? Taking out 30, 12, 25. What about momentum? Down. So this market on every signal I have right now is in the downtrend. Lower highs, lower lows, momentum down, bias down, support the 29.33 zone. In the NASDAQ, let's go back to yesterday if we could. We were in a downtrend. We hit, just like we were talking on the S&P, the 100-day and the Bollinger Band, and today you had a bounce away from it. So those numbers, all I'm saying is they have rationale behind them. I can't tell you that they always do what they're doing. What do I think's happening here? I think the pros are going to try to sell this market against that 18-day average, stops over the 79.04. Why? Well, if you get over 79.04.75, you break this pattern of lower highs, lower lows. Is the market oversold? It is not. But it has hit its first downside target. In the Dow, you finished off at 26,892. The 18-day average is 26,893. Therefore, even though it's only a point, the bias is down since you're under that number. The swing line is down with lower highs, lower lows, so we'll define the trend is down, the momentum is down, the bias is down. If the market breaks, like we've gone through the other three charts, The combination, which happens to be coming together now, is the 100-day average at 26,360 and 26,331, the Bollinger Band, and that'll probably climb over that 100-day average tonight. So on the break tomorrow, I'm looking to see if those support numbers happen. To break the downtrend, take out 27,112. In the Russell, same thing. Look at the 100-day in the lower Bollinger Band. So if you don't have these numbers on a chart, you don't have an idea where they're coming in. I explain a lot of this, by the way, first things in the morning in my subscriber video so that you're not just stuck with it. But in this market, you finished at 1537.20. So you've got the trend down as the lower highs, lower lows, the bias down, momentum down. You've hit the first supports right through here, the Bollinger Band and the 100-day average. And if you keep breaking, you're still in that area. You're right against these numbers now. So we'll see what it can do. But all of these markets are more bearish than bullish as a chartist right now. In the VIX, we pulled back into the 18-day average and the 100-day. Now, we tried the upside. You can see that this was Tuesday. You then kicked yourself up. And if you keep going, I'd look for the Bollinger Band to be the resistance. Instead, the market reversed down into the support of those two numbers. What is the trend, though? It's up. Higher lows, higher highs. Markets that start climbing like that have more volatility, but they're also putting pressure at the same time on the stock indices. In the bond market, you're stuck, and you've been stuck for 4 days against this 18-day average of closes. So the market got, remember, when you drop here, it means rates are going up, real interest rates. When you go up, they're coming down. So now we've got a market that's actually stuck. It's in the middle of no man's land. It's got a lower low, a higher high, and it's at that line in the sand, stuck. I don't see a trend in it right here. When we come to the 10-year note, the settlement tonight was 130.09. So that puts the market, you still have the higher lows, higher highs, but you closed over the 18-day average. So if the bulls are going to keep the trend up, their key numbers 129.8.5. Let's assume that the market, instead of going back up here, starts failing and gets through that 129.28.5. Initially, what it does is you could have lower highs, lower lows under the 18-day average and be back into a bearish trend with the potential, I'm not saying it would go there, of support back at 128.12 to 128.07. So in understanding it, if I'm bullish, I want this market to pick up and start getting through these other numbers. If I'm a bear, I don't want that number taken out. I want to get down under this 129.28, and I want the market to start getting hurt. You see the same pattern in TLT. You've got the higher lows, higher highs. You closed over the 18-day average. So what the bulls are doing, I think they've got control of the market here. Momentum's up, bias up. They don't want to see 141.14 taken out. And as long as it's not, I think they defend their position against that 18-day average. In the dollar index, you now have two shots where you've gone up to the upper Bollinger Band in a row. It's similar to what you did here. I am not saying it has to fall back. You're in an uptrend. When you got to this rally, you had a lower low, higher high. You don't have that set up here. So if this market's going to run, it'll ride against that number. Now, if it's going to fail, you're going to see it pretty fast, and then the support could be the 18-day average of closes. We are overbought, the momentum is up, and you have hit upside targets. Right now, if you knew nothing else, this is an attempt at a breakout to the upside, and treat it with respect. Eurocurrency is falling apart. I don't know any other way to say it. Could this market be going down to 108 or so? It's easily could be the case. It's the flip-flop of the dollar, and it's telling you in part why the dollar's making its move. Lower highs, lower lows. It's been challenging its lower band, and now it's under all these numbers. If this market wants to accelerate on you, it can. You don't fight City Hall on these markets. This market's hurting, and hurting bad, and it's in a downtrend. You've taken the British pound back into a downtrend. It failed against the combination of the 100-day average and the upper Bollinger Band. As the market was coming up there, I'm certain we were talking about it. You had an embedded reading, and then you started losing that embedded reading right here. When you got under 80, it means pricing the 18-day average likely. I wish I could say they're going to. I can't say that, not because I don't know it. It's only likely. It's likely to get back to the 18-day average of closes, and that's what it did yesterday, and you had some follow-through today, but that follow-through is crucial. You've got lower highs, lower lows. The market is saying that the court case, once it came out, and the euphoria that the Parliament was being called back in, well, that wasted itself here, if you will. Wasted isn't a negative. It wasted its energy, and now the market's back into a downtrend. Exhausted, think of it that way. In the Japanese yen, this is just what I call an ugly, UGLY chart. Whenever you get this type of action where you have outside days and then you break them and then you come back like you're doing right now, I give up on them. The resistance is right here, the 18 and the 100-day average. You're not trending. You have a higher high and lower low in a market's momentum that's flat. Bitcoin, this market's gotten hurt pretty good. In fact, today it got back under 7,700. There's an analyst on TV I always watch because this guy thinks it's going to $50,000. He never appears on TV when it crashes. And then he'll be back on as soon as it's going up, and I won't say his name, but I laugh at it because I can tell you when he's going to appear, and he hasn't been on in a while as this market's let go. I don't know that a lot of people even like these currency coins. I have my doubts about them. In the crude oil, this is important. We're watching, remember what I think I said at a recent, maybe a week, 2 weeks ago. I said, what's more important than the price of crude is probably the differential that you're going to see of Brent taking over WTI, and that's because the oil that's being threatened is obviously out of the Middle East. And while the prices in both have been in downtrends, and today you pretty well came back and just hung right at those key averages, you can see that in both, and they've been in a downtrend. The spread difference is what's been moving out in the market. As for trends, these markets are in downtrends, and it's probably more world events than we had the UN. But now you got to be careful. All these UN leaders are going home. And what's to stop the Middle East from going again back into that terror idea? The U.S. today announced they're sending 200 more troops. THAAD system is going there. I think they're sending 4 more Patriot systems, and they're giving this a different coding. I write about it in my newsletter tonight. They can call in more missiles and so on. I don't know that all these Patriot and the THAAD systems can stop drones. I haven't seen enough to know, and I'm certainly not a military person. But you get small drones, it's got to be hard to shoot down. I think a Gatling gun would be better. A wall of bullets. If you take a look at November gasoline, where have you held? This whole break, you've gone back to the 18-day average. Now, what would give the bears, because they have the swing line down, but they haven't had a trend because you've got the bias up. You stayed over the 18-day average. What would give them some would be probably getting under 130, just closing under the 18-day average, actually, but taking out that 157.59.99 level. Nat gas, remember what we talked about. As the market was up here, I said, look at the time of the year. You don't have need for air conditioning in a great swath of the U.S. anymore, and it's too soon for heat in many places. And that's that build that we're getting in these gas stocks right now. And that's not me. It's not my brain. It's what happens. It's September 26th. What can I tell you? You learn those things and you pay attention. I want to remind you, my morning subscriber video. Let me tell you what this does. I get up 4:35 in the morning. I spend almost 45 minutes to an hour just reading about Asia, Europe. I've got a cup of coffee as I'm doing this. And then I start recording 45 charts. And they're live. I've got my charting software open. I put on a headset, and I'm talking to you in the morning. I'm going to give you trade ideas. Unlike what I'm doing here, I can say buy here, sell there, do that. And that's because this is protected by a user ID and password. Yes, it's a subscription video. And no, it's not expensive. Just think about it. A minimum gold tick is $10. I'm $7.95 for 30 days. After that, it moves to $15 if you want to go 30 days at a time, or you can buy a front end, a year subscription for $156. You'll see it all on the website. It's there. But I'm going to review the whole spectrum of commodities and 5 ETFs that are related to the commodity markets, throwing ideas at you. But I'm going to be your wealth of information first thing in the morning. I've already seen what Asia's doing. I'm telling you what's going on there, what I think will impact the markets, if there's something. My idea in these videos is to not try to find trades for you. It's to find no trades, and then when one's really good, mention it for the reason that, hey, this setup looks pretty good, and here's why, here's not. Will I be wrong? It's a guarantee. Will I be right? I am going to be right as well. So you'll see a mixture of all this. If you'd like to find out more, go to our website, www.iraepstein.com, under the word research, morning subscriber video. You can click here. If you're watching me on YouTube, it'll take you there. And I hope you become a video subscriber, because I'll see you at about 6, 7 in the morning. I published the video. I'd like to get it out before the first U.S. reports come out, which are typically 7:30 a.m. Central Daylight Time, and then others follow suit, as you know, up to often 9 o'clock in the morning Chicago time. I'm Ira Epstein. You have a good day, and I will talk to you all tomorrow.